This is the Southside School of Financial Freedom watch list and market report for the week ending April 7th, 2023. Our question this week is, what is shadow banking? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 0.01% on Thursday and was up 0.63% for the week. The S&P 500 increased 0.36% on Thursday, but was down minus 0.1% for the week. The Nasdaq increased 0.76% on Thursday, but was down minus 1.1% for the week. Looking at the week, we can see that there were 6 up finishes and 6 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. On Thursday, all the major indexes finished up, and the market was closed on Friday. New unemployment claims were 228,000. Private payrolls rose by 145,000 in March. Job openings tumbled below 10 million in February. Home prices jumped 0.16% in February. Mortgage rates dipped to 6.28%. And layoffs were reported to have increased nearly fivefold year to date. New unemployment claims, private payrolls rising, job openings tumbling, home prices jumping, mortgage rates dipping, and layoffs increasing nearly fivefold year to date are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is shadow banking? Shadow banking is a term used to describe bank-like activities, mainly lending, that take place outside the traditional banking system. Shadow bank activities are similar to traditional bank activities in many ways, but it is done by non-bank financial companies or NBFCs. They have less government regulation and they are normally outside the purview of the general public. Traditional banks have the ability to create money because banks take in deposits and use fractional reserve banking to loan out more money than the deposits that they have taken in. Shadow banks, however, do not have the ability to create money because they cannot use the fractional reserve banking system. Shadow banks raise money from investors and then lend that money out to make a higher return. Shadow banks can be risky because they aren't closely regulated. They leverage more than their mainstream counterparts. They use a lot of short-term funding, but they do not have deposit insurance. And they collateralize funding, which can lead to high levels of financial leverage. Bond funds, money market funds, finance companies, hedge funds, investment banks, and special purpose entities are examples of shadow banks. Do you own any shadow banking stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you're going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending April 7th, 2023. The strongest performer on the list this week was VanEck Gold Miners ETF, ticker symbol GDX, in the third column. It was up 0.26% on Friday and increased 6.43% for the week. GDX is an index fund that invests at least 80% of its total assets in common stocks and depository receipts of gold mining companies in order to match as closely as possible the price and yield performance of the MX Gold Miners Index. It uses a passive investing approach to approximate the MX Gold Miners Index. The fund is a modified market capitalization weighted index primarily composed of publicly traded gold and silver mining companies, and thus the fund is non-diversified. Looking at a summary of results, you can see that GDX has increased more than 20% year to date. I did not generate cash flow from GDX this week, but I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside is up 38.69% versus 7% up for SPY, a difference of 31.69%. The Southside is beating SPY by almost 32%. The cash flow generated by the Southside cash flow system for this week was 4.22% of the portfolio account value. The account value changed by 4.22%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.05%. Bitcoin watch. Bitcoin lost 1.9% this past week and continues to be in a bear market. It is down more than 59% from its all-time high achieved in November 2021. I sold option contracts on one position this week. It was a put that ranged from $0.00 to $77.34. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of FinancialFreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are arranged in playlists, levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.